Most brokers I meet who've been in this game for 10 years plus tell me the same thing. They got the employed versus the self-employed decision wrong somewhere along the way, and they have paid for it for years. Some went self-employed too early, chasing the six-figure dream they'd heard from friends, and they quietly burnt themselves out in 12 months, wondering where the leads were ever meant to come from. The others stayed employed 15 years out of fear, and they watched their colleagues who were behind them at qualifications overtake them and earn double. Same regret, two completely different shapes and both completely avoidable. So in this video, I'm going to give you the honest comparison that nobody actually does. Not the brochure version, not the Instagram version, the real numbers, the real risks, and the real lifestyles, and how to know exactly which one is right for you now. Now, this is genuinely the biggest career decision you'll probably make as a mortgage broker. Bigger than which network you join, bigger than which firm hires you, bigger than your qualification. And almost everybody makes it for completely the wrong reasons. So through this video, I'm going to break down this properly, okay? Forget 2 long sections explaining each lane. There are only 3 questions that actually decide this: how you get your clients, how much you keep, and how exposed you are when things go wrong. We'll go through them one at a time, side by side. And there's one idea that I'll keep coming back to because nobody says it out loud. Employed is not the safe option. Self-employed is not the better option. They are completely different jobs that suit completely different people at completely different stages of their career. Get that straight and the whole thing becomes so much more simple. You ready? Let's do it. Now, quick context before we get into it. Both routes are giving regulated mortgage advice. Both require CMAP. Both are FCA authorized in different ways, obviously, and the advice itself is the same. What changes is everything around the advice, and that changes everything about the job. So let's hit the 3 questions that decide it. So question 1 is, how do you get your clients? Now, this is the question most beginners don't take seriously enough at all, and it's probably the one that quietly decides who survives in this career. You see, employed brokers don't have to find their clients. Ideally, I mean, they shouldn't have to. The firm hands them inquiries, estate agent referrals, bank-fed leads, walk-ins, internal leads. You sit at your desk, the phone rings, you advise. Lead generation is essentially not your problem. For a brand new mortgage broker, that is enormous, by the way. You can focus entirely on getting good at the job, the fact finds, the recommendations, the protection conversations, the case management, all without having to be a marketer at the same time. Self-employed brokers, though, have to find every single one of their own clients. Yes, your network might give you a few here and there. Yes, you might have a couple of introducers, but the bulk of your business is on you. You build it, you market it, you generate it. If your lead plan is, I'll figure it out once I'm qualified, you'll be back in employed work inside 18 months easily. Lead generation is the entire game of self-employment, okay? And most brokers underestimate how brutal this is going to be at the start. You see, this is the question that filters everybody. If you can answer, yes, here's exactly where I'm going to get my first 30 clients from, with specifics, actual introducer relationships, a real personal brand, a niche you're known in, a content engine, then self-employment is open to you straight away. If your answer is, I'll work it out, you're not ready yet, okay? Stay employed and figure the lead plan out first. Question 2 is, how much do you actually keep? Now, the money, this is where the gap between employed and self-employed becomes genuinely shocking, and where most employed brokers eventually just wake up to this. So let me make it a bit concrete for you. Take a £250,000 mortgage. Same case, same client, same conversation, same advice. An employed broker writing that case might see somewhere between, say, £150 to £300 in their pocket from it. On top of their basic salary, obviously, and the firm keeps the rest because they're paying you the salary, providing the office, the leads, the support, the compliance, and the benefits all within that. But a self-employed broker writing that same case might be somewhere between 900 to say 1,100 after the network split, and that is same advice, same client, roughly 4 to 6 times the take home per case. Now, that is not an exaggeration. That's the system. The employed broker is paid for certainty, guaranteed salary, guaranteed leads, guaranteed support. The self-employed broker is paid for risk, no salary, no guaranteed leads, no support unless they pay for it from someone like myself. See, the income picture overall is pretty crazy. See, employed brokers in the UK typically are going to earn between 30 to 50 grand all in during their first few years. Strong producers push into the 60s, but most employed brokers top out somewhere between 50 and 70 grand because the firm is keeping the lion's share of what they produce. The ceiling is very real here. Self-employed broker earning, though, is all over the place. Some earn 30 grand in a year, some earn 90 grand. Established brokers, first 2 or 3 years in with their lead generation and remortgage book working properly can often comfortably sit in 6 figures. Top earners as well with a small team push well into multiple 6 figures. The ceiling is essentially how good your business is. So yes, self-employed pays more per case and has vastly higher income ceilings, but the gap doesn't matter if you can't get cases on your desk in the first place, which brings us straight to question 3. Now, question 3 is, how exposed are you when things go wrong? This is a question most people skip entirely because their excitement to go self-employed and earn all that money, and it's the one that kills the careers. An employed mortgage broker, the risk is almost entirely the firm's risk. If the market dips, the firm carries the cost. If the cases fall through, you still got paid that month. If you're ill, you get sick pay. If you're on holiday, you still get paid. If you have a bad month, you've got a basic salary to land on and fall back on. The worst case scenario is the firm restructures and you get made redundant. In a buoyant market though, you're hired by a competitor inside a fortnight. See, your life is structured, your tax is sorted by PAYE, your pension is contributed to, your existence frankly is predictable. Whereas as a self-employed broker, the risk is entirely yours. There's no basic salary, no paid holidays, no sick pay, no pension, unless obviously you set one up, no income if you don't work, cases fall through and your month it just disappears. Markets dip and your pipeline goes quiet and you need a financial buffer. 6 months of living expenses is absolutely the bare minimum that I'd recommend before anybody goes self-employed, and you need the mental resilience to handle the income volatility without panicking about it. And let me tell you a bit that doesn't make it into Instagram, okay? Because it's the most important part of this entire video, in my opinion. For every self-employed broker that you see online showing their personal best month with champagne emojis, there is another self-employed broker, possibly several actually, who quietly went back to employed work, broke and disillusioned. And you'll never see them, by the way. They don't post about it. Of course they don't. They don't make a video talking about it. They just disappear back into the system, often worse than if they'd left. A meaningful chunk of new self-employed brokers do not make it past year 2. They ran out of money in year 1 before their pipeline actually matured, and they underestimated how long lead generation takes. They confused having CMAP with having a business. The ones who survive earn brilliant money, yes they do, but the ones who don't are in the graveyard, all right? So when people tell you self-employed brokers earn so much more money, understand exactly what that statement really is. It's the average of the survivors. It's not the average of everyone who tried. The Instagram version of self-employed brokering is survivorship bias dressed up as advice. The brokers in the graveyard had the same intentions, the same dreams. They just didn't plan for the bit between the qualifying and the pipeline maturity. And it ate them alive. See, this is the bit that you have to hear. Self-employed broking is brilliant. Of course it is. If you make it past those first 18 months, it's amazing. The whole game is making it past those first 18 months. So let me be blunt for a second, okay? Because the Instagram brokers won't, and they won't tell you that. Self-employed broking will be the loneliest thing you've ever done in that first 6 months. It's brutal. Some weeks you'll write 12 grand and you'll feel like an absolute king. But some weeks you'll write 2 grand and convince yourself that you've ruined your life. You'll lie awake at 3 a.m. doing the maths. You'll watch friends in salaried jobs book holidays without even thinking about it and feel that quiet stab of envy. You will wonder why you did this. The only people who make it through that period are the ones who knew it was coming and they planned for it. The ones who didn't know are the ones in that graveyard again. So if you are going to do this, go in with your eyes very wide open. The freedom and the income on the other side are genuinely worth it, but the cost of getting there is very real. And pretending it isn't there is how people fail. So here's a test I give anyone agonizing over this question. It's not about which one is better, it's about which one fits where you are right now. So you should be going employed first if any of those are true. You're brand new, you haven't yet got the competent advisor status, you don't have 6 months of living expenses saved, you don't have a clear lead generation plan that you can actually describe in detail, you've never run a business before, and you need to learn the actual job before you learn the business. You see, you'll genuinely perform better with structure and a team around you. If that's you, then you should be going employed, but you should go self-employed if all of these things are true. You see, you've got cash and you're very close. You've got at least 6 months worth of expenses banked, ideally 12 months. You have an actual lead plan, not I'll just do social media, but a real specific plan with introducers, content, referrals, or a niche you are already known in. You're disciplined enough to manage your own week. That anybody watching over the top of you can stomach lean months without panicking. And most people, they benefit from doing employed first for at least 2 to 3 years, learning the craft properly inside a firm, and then making that jump once they've got the skills and the savings to do it without even flinching. That's the path most successful self-employed brokers I work with, and including myself, we actually took. They didn't actually start self-employed. They earned the right to be self-employed. You see, if you're employed now and you're wondering when to make that move, here is the genuine signals. You are hitting your earning ceiling and you can see it. You've worked out that you'd take home far more after the dip of a year of self-employed, and you've got a clear lead source that you can take with you, or you can build it really quickly. Existing introducers, a personal brand, a specialism, something more than just hope. You've got to have savings, like I said, at least 6 months of expenses, ideally, like I said, 12. You've got the temperament, you can handle volatility, you're disciplined enough to manage yourself, and you genuinely want the freedom, not just the bigger numbers on a payslip that you're imagining. So you should never be running away from a bad employed job. You should be running towards a real opportunity. There's a big difference in that. If all of those are true, then go. Don't wait another year at all. The income gap between being employed and self-employed compounds every single year that you delay. But if any of those are false, stay employed and fix the missing pieces. So if you're watching all of that and you're leaning towards going self-employed, the next decision waiting for you is one that, again, so many people get wrong, which is which network should you join? Get that one right, and self-employment is a brilliant life. Get it wrong though, you'll spend 2 years tied to a company that's quietly costing you loads of money. So the next video to watch is right here on the channel, Choosing the Right Mortgage Network. It's an honest guide. It walks you through how networks actually work, why the headline commission split is a lie, and what really matters in compliance support, and the red flags that should make you walk away. Watch that one next.